Hello traders, and welcome to another educational video titled The Shooting Star. Let's take a look at the specifications of this interesting reversal pattern. It has a small real body of either color and it has a long upper shadow. The lower shadow is tiny, small, and in a lot of cases it does not even exist. Good. One more time to remind you to emphasize that the color of the body is not important. Upper shadow is 2 to 3 times the body size. Excellent. And of course is located at the top of a rally and it has bearish implications. Let's take a look at a real chart and try to identify the shooting star on our screen. Look, here after a rally, we identify the shooting star at the top of the rally, and of course the rest is history. Prices tumbled, fell, and of course we saw a nice decline. Good. Now we continue with a few strategies, starting with the basic one, just to give you ideas how to create, how to construct your own trading systems, your own trading strategies. But before we do that, remember to subscribe below, and at any time feel free to comment and like. Good. The first strategy, it's a basic strategy, and we identify the shooting star at the top of the rally near a resistance area. So this adds to our confidence. Never forget that the more excuses we have to open a trade, the better it is. Now, after identifying the shooting star near a resistance area, in this case, we place a sell order right below the low price of the shooting star. And of course, we place a protective stop loss right above the high price of the candlestick. Now, we place the protective stop loss in our trades just in case the market goes in the opposite direction. Nothing is 100% certain in this business or in any other business, and that's why we place a protective stop loss to have a pre-calculated, a predetermined loss just in case the market goes against us. Now, potential take profit area is going to be calculated at the 200% area. So this implies that we have 1-to-1 risk to reward ratio, meaning the distance between the sell and the stop loss is equal to the distance between the sell and the 200% area. Of course, you feel free to change the percentage to suit your trading profile. Once again, this is a basic strategy. Now, let's improve it. Once again, a similar scenario, we identify the shooting star at the top of the rally near a resistance area. We place a sell order right below the reversal pattern and a protective stop loss right above the pattern. Now, the first take profit is calculated, is seen at the 200% level, but we are not going to close the entire trade, but rather a part of the trade, and we're going to allow another part to run even lower so we can book more potential profits. And the second take profit level is seen at the 300% level. Good. We're going to improve once again the strategy. Now, this time we identify the shooting star at the top of the rally near a resistance area. Once again, we feel confident enough. We place a sell order right below the low price of the candlestick and a protective stop loss right above it. Now, the first take profit is seen at the 200% level or any other Fibonacci level or any other percentage level that you feel confident enough. And we do not close the entire trade, but rather we close part of our trade and we allow another part to run lower. Now, at the 300% level, we close another part of our trade, but unfortunately, there was a reversal pattern near the 200% level. So after we took part of our profits at the 200% level, after we close part of our trade at the 200% level, we identify a reversal pattern in the opposite direction, in this case a hammer, so we are forced to close the entire position trade right there. Good, never forget that, because these reversal patterns in the opposite direction, they appear often, and we have to be aware of that, because there is no excuse, there is no reason anymore to be in a sell trade. Excellent. Let's take a look at this strategy now, just to have more ideas. Here we have an upward rally, and we identify the shooting star near the moving average, right? Near the moving average line. It acts as a resistance in this case. The moving average line is a dynamic resistance, if you wish. So we're going to place a sell order right below the low price of the shooting star and place a protective stop loss right above the high price of the shooting star. And then the take profit, of course, is up to you, but never forget that a common strategy, take profit strategy, is to close the entire trade when we identify one or more closes above the dynamic moving average. And this is the case here with a long white body closing above the moving average. I hope you enjoyed it, and don't forget to subscribe below. See you in the next educational video.